Hey, good morning, everybody. Welcome to Wednesday, May 30th. I hope that your week is going well as, the markets have had some up days, they've had some down days. Let's see where we end up today. Look forward to our conversation with Dave, and he will join us next. Guys, stay tuned.
5.7 Light FM Pink is there. Good morning. I'm Morning Dave. It's 8:40, 20 now before 9. Time to check in on your money and find out what Wall Street's doing with and to your 401k and your IRA this morning. Time to check downtown. The offices of Statler Financial Services, where Phillip Statler's on the air with us. And Phillip, this is one of those periods of time where Dramamine is not a bad thing to have handy, because a couple of days ago we were up 900 points, and yesterday we fell by the better part of 400 on the Dow, and it's all responding to news tidbits we get on things like the vaccine yesterday. Oh, gosh, maybe not everything's going to be right and shiny and clean right away. And all of a sudden we sold everything like chiclets again, didn't we?
Well, it did. It seemed like it was like the last hour yesterday. Things just kind of fell off pretty dramatically because the rest of the day, when I looked, I was in appointments all day, but whenever I'd look, it was up. So it was kind of that last hour of the day, things kind of fell apart, and we saw a drastic decline on all the indexes. So
yeah, it kind of fell off the edge of the earth starting about 4 p.m. and just went straight down. I was getting kind of nervous looking at the close, and then started looking at the futures this morning, and all of a sudden everything's bright and shiny again. I think we're kind of taking back some of what we lost without any other good reason, right?
Well, yeah. I mean, yesterday it seemed like some of the shininess came off of the vaccine news, and so people were not quite as committed to that expectation as they were in the morning time, and so so that was some of yesterday's give back.
It's interesting. It's interesting to watch if you aren't trying to live on what they do, and anybody that's trying to live on day trading probably needs their head examined at this point, because it really is. A rumor gets out on the floor of the market, and you can see a 300-point swing for absolutely no objective reason whatsoever.
Well, that's true. I mean, that's and it seems like now, Dave, we are. We're seeing those swings, and now they're not that big of a deal, right? Because we've seen much bigger swings in a single day. So, hey, a 1% here or 1.2% there, it doesn't seem to be that big of a swing right now.
Now, we're kind of getting used to the level of volatility, which actually, when you think about it, makes sense when you're in a point where nobody really has any forward vision with any clarity whatsoever. And like you and I harp on all the time, the one thing money does not like is uncertainty. And we're into one of those times where that's pretty much the definition of what we're going through right now.
That's right. I mean, there is a lot of uncertainty, and the flip side of uncertainty is there's a lot of hope. And so that's what we saw on Monday, right? We saw a lot of hope on Monday, and didn't quite follow through yesterday. And we'll have to see kind of what today brings us.
Absolutely. It looks this morning so far like the futures are back looking at hope. It also could be partially the fact that we haven't had any new tweets come out regarding starting the trade war up with China again, which always feels relatively good when Washington is quiet and keeping to business, isn't it?
Well, it is, Dave. That's just one of those things that's the other thing we've kind of gotten used to, right? Is when the president talks, you just don't know what's going to happen.
Absolutely. A whole bunch of re-ratings are coming out on my ticker this morning. Some of them surprises, some of them not. After a miss from Home Depot the other day, the rating services are raising their target rate by $20 a spot, but it shouldn't be any major surprise to any of us that the cruise line companies are really getting whacked. They ended up taking Royal Caribbean, their price target was cut from $102 all the way down to $49 by one of the rating companies, and Carnival stock expected to look at a price target now of $12. That's down from $37. Shutting down the cruise line industry has not been good to their stock futures one tiny little bit, has it?
No, not. And you got to wonder why it's taking so long for this price target change. I mean, come on, we've been this 8 weeks now.
Well, you do have a point to be made on that. They haven't done a dang thing for 8 weeks. The one good thing that came out is both the cruise line, Royal Caribbean, I think, was the one that told you that they were loaded with money and they were able to make it through this shutdown and we're going to come out of it clean. It was Royal Caribbean that said that, wasn't it?
I think it was.
Yeah, it was. So they've got a pile of money, so we're assuming they're going to come out of it all right. The question is how long it's going to be before they can start booking and sailing on cruises. We've got a bunch of reports out this morning that might give us a clearer picture as to where some of the reporting companies are going. What have you got? I know they're led by one of the big retail chain monsters.
We do. We've got, we had Walmart this week. Now we got Target coming out. And so Target came out at 59 cents a share. That was 19 cents better than expected. Revenue obviously beat forecast also. They're getting a big bump from all this coronavirus stuff too. Same store sales rose 10.8%. That was a lot better than expected. They expected a 7.5% increase. So obviously the bulk of growth is being driven by digital sales, not people actually going to the store. And so we're seeing Target actually get a little over a 1% bump this morning. But and that may not seem like a lot, but their 52-week high is $130 a share, and they're trading at like almost $125 right now.
That ain't a bad place to be when you're coming out of a major mess like we're going through here. What I read that Target kind of, sort of, had that order electronically and pick it up at the door operation down a little bit better than some of the other retailers did. That evidently was their salvation at the end of their quarter.
Definitely digital sales was a big deal for them. And they must have had things lined up a little bit better. And let's face it, people a lot of times would rather go to Target than Walmart if you have the option.
That time, yeah, point taken on that. We mentioned Home Depot the other day with a miss, and that was why I was reacting to the fact that they were going up on the rating services. One of their major competitors reported as well this week, didn't they?
Yeah, and they did a lot better than Home Depot did. Home Depot was a
talking about Lowe's for
Lowe's.
what?
Yeah, I'm sorry. What did I say? Did I say the wrong thing? I was thinking the right thing.
I let in, and you didn't mention the names.
Oh, gotcha. I'm sorry. So Lowe's came in and they beat substantially. They're expected to come in at like $1.32 a share. They came in at $1.77. So I'm not sure what they did different than Home Depot, but definitely they had a better job of net income as well as revenue topped estimates by about 11%. Same store sales jumped, which was a lot better than expected. I mean, the analysts expected only a 3.3% increase in their same store sales. So they kind of blew that one out of the water. Just like everybody else, they are withdrawing their full year forecast due to the uncertainties that the virus is going to continue to put out there when it comes to construction. And they're getting a big bump today. They're up 5.7%, and they're like $3 away from their 52-week high.
I was going to say they're toward the top of my big winner list this morning.
Yeah, and that's why. I mean, people are really getting driven there. I mean, their 52-week high is $126. They're right now at $123.50.
Cool. Other indications?
Well, we have another loser. McKesson Company is a drug distributor. They came in 17 cents above what was expected. Revenue was above, but their full year forecast came in shorter than the analysts had expected. And so that's putting a little issue on their stock this morning. They're expecting some headwinds from the COVID-19 pandemic. Not sure exactly what the details are there, but they're trading down a little over 1.5% this morning.
You can kind of take that as a cautionary tale there. Giving guidance at all probably is not the smartest thing, because they aren't penalizing companies for withdrawing guidance. But if you give an honest picture, this could be a rough road, people. They're whacking you, aren't they?
They're whacking you for that. We have Harley Davidson not reporting, but they're opening their factories this week at a reduced production level. And then Urban Outfitters came out. They lost a significant amount of money. They lost $1.41 a share. They were only expected to lose about 29 cents a share. So a big miss there. Revenue obviously below forecast. They had a 28% drop in comparable same-store sales, and the company expects a 60% decline in same-store sales for the current quarter we're seeing right now because of the COVID-19 and how it continues to weigh on us. So they're down 3.5% this morning.
That's premium retail has not been doing well so far this earnings season, and you got to consider that this was January through March numbers we're looking at for almost all of them, and that only includes a couple of weeks of the COVID-19 crisis. I shudder to think of what some of these companies' second quarters could be.
Yeah, exactly. And Urban Outfitters is getting close to their 52-week low. They're about $3 a share away from the $12.28 52-week low that they had.
Well, poop. Setting the table this morning, it was an off day on Wall Street yesterday. Dow was down 390. NASDAQ was down 49.7. Standard & Poor's was down just under 31. As you said at the outset, Phillip, that almost feels normal these days, which kind of makes today's pre-opening look kind of interesting because the green looks an awful lot like the red from yesterday did. 45 minutes early. Where are we going?
It is. It's pretty close across the board. We've got the Dow up 1.2%, $292. S&P 500 up 1.2, about 34.5. And we got the NASDAQ up a little over 1% at $101. So everything's definitely in the green, bouncing back from yesterday's close. We've got silver down 0.5%, gold flat right now. Crude oil's up another another 2.3% at $32.73 a barrel.
One of my articles this morning said, is oil going up in price too fast? Well, for our gas pumps, yeah, we kind of don't like it, but I got a few friends that would really like to see the oil rigs reopen up in the Bakken Plateau up in the North Dakota corridor, so can't go up fast enough for them, can it?
No, it can't, and that's going to be interesting today because crude oil inventories are supposed to come out today sometime later this morning. And then the other thing that's going to drive markets later this afternoon is going to be the federal open committee meeting minutes will come out. And that's usually about 2 o'clock this afternoon. And so we will be focused on looking at what happens to the market when those come out.
It'll be interesting to see just whether or not there's a sense of panic at the Fed as well, and we'll get that in the minutes this afternoon. Overseas markets, mixed bag in Asia, some up, some down at the close early this morning. Europe generally is pretty evenly up by about 0.33% midway through their day. Phillip, the up, the down, the sideways, nobody knows which way the market is going. Even the companies aren't giving guidance. That means stability counts for an awful lot in a retirement portfolio. How do I find you for advice to find that stability?
Dave, they can give us a call at 863-382-0037. Give us a call, schedule a 15-minute phone consultation, schedule a time to come in and do a financial x-ray to see how much risk you have in your current portfolio. Follow us on Facebook at Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty, and back here again tomorrow morning on Light FM. Phillip, thank you so very much. Have a good day.
All right, man, you too.
Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Remember.
Hey, folks, again, I want to thank you for joining us. I hope that your week is going well and finishes strong. I look forward to speaking to you again tomorrow. If there's any way I can help you, please reach out, give us a call, 863-382-0037. Thanks until tomorrow.